Okay, we're going to get started today by looking at the S&P 500 like we normally do. You can see that as of today, we've retraced all of the losses we've had since the Liberation Day, April 2nd. So let's look at our stochastics charts for the S&P 500. You can see that we were in a downtrend for 2 months. And we right here, we kind of broke out of that. And at that time, that was last week, we mentioned that it was pretty important. And what's happened here is we've had a lot of momentum in the stock market. And we mentioned last week that it was called a breadth thrust. And that is a breadth thrust is a lot of um, more people buying than selling. You have a lot of um, momentum in the stock market. So basically, we are at a point right now where we had 9 straight days of positive closes for the S&P 500. That's the most in 20 years. So you can see that we'll go over some of these charts. You'll see that we're kind of at the top end of the range for a lot of our charts. So in other words, we're 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 don't be surprised if we have a pullback. Okay, so let's look at this one. This is a gold. You can see it's at the top of its range. You see the XLY. It's starting to break out too. We have XLB, the material sector, at the top of its range. So almost every one of these charts we're following is at the top end of its channel. You can see right here, this is XLC. All right, and the energy is actually at the low end of its training range. So this one right here is the real estate sector. You can see it's at the top end of its range. So if we don't break out and go higher than this, then the natural tendency is to go down in the channel. So let's see. This is XLF. This is the financials. They're near the top of their range. And uranium, it's at the top of its range too. So let's look at some of the stocks we're following. You can see that AbbVie is actually um, it's halfway between its top and bottom channel, so it has a way to go before it reaches the top. You have Abbott Labs right in the middle. You have Google. We've had a downtrend for a couple months nearing the S&P 500, but you can see there could be like a little breakout there, and there could be a new trend forming upwards. Let's look at this one. This is Altria. This is um, it pays a 7 or 8% dividend, and it's been in steady demand during the crisis times we're having right now. It's really hard to get a good, reliable yield. Amazon, you can see that we have like this trend sideways um, for quite a while. So we're at the top end of its downtrend. It hasn't broken out of its downtrend yet. So we still have this sideways pattern that's been going on for over a year. They just came out with earnings. They did not. Um, there was a lot of negative opinions on Amazon, but they're growing their advertising, which is pretty important. They're one of the largest advertisers in America, and their AWS was growing pretty good too. Um, just like almost every other retailer, they said they were kind of iffy on how much money they would make in their forward projections because of tariffs. And There's almost every company that's in retail has unknown tariff costs. Okay, Apple, they released our earnings and they disappointed and they went down 3%. But you can see that they're in a well-defined downtrend. And you can see that they hit the top of their downtrend and they started going down after the report today. All right, AT&T, another reliable dividend-paying stock. It's been 7% earning, 7% yielding stock, and it's in an uptrend, and it's right in the middle of its channel. All right, let's look at Colgate-Palmolive. It's been in a sideways pattern for over a year. It's a dividend-paying, very consistent um, sales in good times and in bad times. So let's look at CSX. This is in a downtrend. This could be because there's a 50% chance of a recession. Many economists are saying that. And if so, the amount of rail traffic goes down if there's slower economic activity. But it went up 2% today. Maybe I'm waiting for it to break out of this downward channel. And a lot of stocks we're following are breaking out. You can see like this one right here. This is Meta. You can see that this downtrend started in mid-February, and this was right around the time whenever Mark Zuckerberg was on a stand for an antitrust um, lawsuit. And you can see we broke out of this when they had their earnings, and they're starting to go in this uptrend now, much like the S&P 500. But they are overbought. Almost every stock we're following and index is an overbought status right now. Not this one. See, most of them are overbought. So don't be surprised if we have a pullback in the stock market next. Let's look at this. Netflix. I added this as a stock we're following. This seems to be a very recession-resistant stock. People, we mentioned last week, they won't cancel their $20 subscription because they get a lot for what they pay. You get unlimited movies for a month for $20. So they're at the top end of their range. And they're overbought in a major way too. So a lot of the stock market right now is overbought, and we'll go over that later. JP Morgan near the top of their trading range, overbought. And this one right here is interesting. Microsoft is in a downtrend. They had really good earnings, and their stock went up 10%. That's the most it's went up like in the history of the company, I think. But you see it stopped at the top end of their range. So Pepsi is in a downtrend, and they have a lot of things going against them. Number one, tariffs are affecting the stock. They have a lot of expenses that they said in their conference call that they're experiencing because of tariffs. They have the GLP-1 drugs that they're dealing with. People are not eating as many snacks and drinking as much Pepsi when they're not overweight, and they take the weight loss drugs. All right, so let's look at Procter and Gamble. It is in a sideways pattern. It doesn't look like it's going to be um, moving upwards because it pays a dividend. They're also affected by the tariffs situation. All right, let's look at Visa. This has been one of the most consistent stocks that we're following. You can see it's in a reliable uptrend. It's halfway between its low end of its channel and the top end of its channel. So it's overbought right now, just like almost every other stock. Um, Let me see another good one. Waste management. We mentioned before that waste management, they're one of the largest um, waste facilities in America. They they have a consistent amount business and they raise their prices, they have a bonus of recycling. They can actually recycle some of the trash, and they also make gas from the methane from the landfills. So this is a steady eddy dividend paying stock. And in crazy times like this year, it continuously um, delivers in the stock market. Okay, here's okay. Okay, Walmart. Walmart is a very consistent stock also. And in good times and bad, people still go to Walmart to save a little money. And there's it's a steady earning company. It's overbought. You can see that stochastics are really high. Okay, Berkshire Hathaway. Okay, there's going to be a meeting on Friday. No, tomorrow on Saturday. Berkshire Hathaway annual meeting. And the great thing about that meeting is Warren Buffett is a cheerleader for the stock market. He basically advocates buying and holding stocks for long periods of time, and he believes in the U.S. economy and the United States stock market. So a lot of people go to that conference, and after leaving the conference, they preach to all of their disciples, maybe on TV or wherever, that believe in the stock market. That's why a lot of times next week is going to be a good week because people are they're given a pep talk by the world's greatest investor. And you can see that um, Berkshire Hathaway is a domestic oriented company. They're not affected as much by tariffs. They sell Geico insurance. They do railroads and a lot of service based. They sell houses and Dairy Queen. So most of their business is in America. So that's why it's continuing to outperform this year. MasterCard, very similar to the Visa chart that we saw earlier. You can see it's nearing the top end of its range. So don't, I would expect there to be a pullback to down to here next in a zigzag pattern. So, so this is a very reliable company that's growing at 20% a year. That is very good for an older company with, it's a larger company too. So let's look at eBay. eBay continues to do well in this environment. They had a good earnings report and they're overbought also. Let's see. Let's look at Tesla. Um, if you go back a year, it's kind of stuck in the trading range. Um, we went, we basically went down 25% this year, until this point. They basically missed their earnings in a massive way. And on top of that, they didn't have a CEO for a good part of this year. And 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 their earnings aren't that great. They're not growing as much, and their PE ratio is extremely high. So so right now, even down though it's down 25%, it's still pretty expensive. A lot of people are buying it just because of the promises of robots and the future, robo taxis, and that those aren't currently in the estimates. So let's look at NVIDIA. You can see that it is in a downtrend. It's at the top end of its downtrend right now. So let's see if it breaks out next week. It'll either be up here in a breakout or we'll be heading towards this bottom end of this channel. We'll see. All right, so I think that's it. Okay, we had here's the chart of Eli Lilly. It's in a sideways pattern. They had earnings come out and they mentioned that their their drug for weight loss is not covered by CVS. So CVS chose a competitor, and that news sent the stock down 10%. But you can see it's right in the middle of its trading range right now. So, all right. And T-Mobile, they came out with earnings and they dropped 10%, but now they're basically right in the middle of their trading range. This is one of the strongest charts that we're following. It's still in an uptrend after multiple years. All right, we do this like once every 2 months, the stochastics on this and the chart patterns. Okay, now let's look at the calendar. You can see that we are beginning May. We had earnings season, and a lot of times good earnings tends to make the stock market go up. May is traditionally a good month of the year. You can see the average stock market returns. May is a really good month. And we'll go over a little bit later. There's a saying, sell in May and go away. And that's not necessarily true. I mean, that's not something that actually will help you because May has actually been positive 9 of the last 10 years. And the 6 months from May until October have been positive 8 of the last 10 years. We know in the summer, August, September, traditionally weaker months. And June is traditionally a weaker month. And that might be because earnings are not coming out to save the stock market. So every 3 months, earnings come out. So so we had earnings in April, May, then they'll come out in July. See the pattern here? And then in October, they come out again. So that's why you have a tendency of having a good month because earnings tend to drive stocks upward. All right, so let's go back to our talking points. All right, so S&P is up 5% from last week. 25% of this, wait, no, let's look at this. 56% of the stocks are above the 200-day moving average. That is pretty good. And 56%, let me see. I think I missed this. 40% are above their 200-day moving average. Okay, so that means we're gaining momentum. And whenever you have breadth, B-R-E-A-T-H, breadth, B-R-E-A-D-T-H, on your side, stocks go up with sentiment. So that's why we look at these. So this is actually going up. 56% is pretty good. So that's a good sign we're starting to have momentum. And let me see. Treasuries are basically unchanged. The 10-year is the most important. So it's unchanged. The 2-year is up just 1.5%. So now we're actually overbought in the stock market. And one thing you ought to keep in mind that we're learning here is that I think the president is he's kind of a shock, and he likes to shock the people that he's his adversaries and the people he's trying to make deals with. And sometimes you just can't take him seriously. Assume that if there's something really shocking that he says, such as we're going to take over Canada or we're going to put 150% tariff on every country. If the stock market reacts on that, you have to assume that it's just his negotiating tactic. So anyway, let's see. So when we had this market downturn, we had a lot of these catalysts for the stock market to go down happen at the same time. So let me see what else we have. Okay, let's look at our next talking point. Okay, let's look at the S&P 500 again. So we have this downtrend for a couple months, and we broke out of this last week, and we're now starting this uptrend. And you can see we have this jagged uptrend here. You can see we're at the top end of the range, and the next logical step is to go down here So if we correct down to the bottom of this trend line, don't be surprised, because the stock market is totally overbought now. Um, and if this pattern continues, we'll go down to here and we'll go up to here, and then we'll continue up to here. Okay, so we're starting a new pattern in the S&P. So let's see if that continues. But we're still, keep in mind, from April 2nd, we still have a 90-day period of time to make negotiations. After 90 days, that's 3 months, then let's look at our calendar here. April, okay, we had an extension of the tariffs. We had an extension right around the 14th or so. So 3 more months, May, June, July. That's around July 4th. So right around here, people are going to get real nervous because we're going to start having um, fears of a worldwide tariff implementation. And I think what's happening here is we're we're going to have a de-escalation of the tariff situation, and cooler heads will prevail. And I think I think that you have to look at every investment that you have and make sure that you see how tariffs would affect it, number one. And number two, if they're totally not affected and it goes down, you can't get suckered into believing that the stock everything goes down whenever there's a tariff applied. For instance, T-Mobile USA, hmm, would they be affected? Most of their money comes in from services they give to people every month. So in America, and they might make less sales of iPhones if the iPhones cost $3,000 a piece. That's an example. But okay, so we're looking for a really good May because um, May is typically a decent month, and we have Nvidia's earnings coming out at the end of May. So keep that in mind. All right. So July 4th typically is a decent, um, right around the 4th of July, we have a really good stock market because people enjoy the 4th of July. It's one of the holidays everyone looks forward to, and they're in a jovial mood right around then. So June isn't such a great month. All right, so let's go back to our talking points. Okay, well, we'll review this again. COVID, low, right here. Um, S&P has bounced off of this trend line to the penny, and that is definitely a good support level for the S&P 500. Now, we could retest that low, and which is definitely possible. And if that happens, there's going to be a lot of freak out in the stock market. But remember, we do have this long-term support from back in COVID times. All right. So let's look at the 10-year Treasury. You can see that in general, it's going down and it's in a downtrend. And as it's going down, the stock market is going up. So this is like the market that we've had for the last 5 years, couple years. Um, as the Treasury goes down, that's usually good for the stock market, um, because the it makes the borrowing money more affordable for businesses. All right. So let's look at the variables in the stock market. We see the price of oil is down to $58 a barrel. That's a good indication that the economies around the world are slowing and there's less of a demand. And it also could show that there's countries like Saudi Arabia that's making a lot of oil that increases supply. So let's look at inflation isn't changing from last week. We have the US dollar is unchanged. It's been in a downtrend, but it's unchanged now. Gold is down 3%. It seems like gold was a safety haven in the economic turmoil for the beginning of this year. And as things are starting to calm down now, that people piled into gold during the time of uncertainty. Now people are jumping off the ship, like I said last week. So, all right. Okay, you can see that the US dollar index is still in a downtrend. And it went up just a little bit this week, but it's still um, in a downtrend. But we know from all the earnings reports that came out this week that it helped the big tech companies. It would help um, for every 10 the US dollar is down 10% this year, 8 to 10%. And as the dollar it goes down, that helps whenever companies do business overseas. So that'll improve the earnings of every major tech company. Right. Fear and greed. We're finally exiting fear. And probably next week we're neutral. So right now we're at a position where we have stability in the stock market. So we're still fearful, but um we're going towards neutral now. Um right now we're still bearish. This is the 10th week in a row we've had bearish sentiment in the AAII survey. So that's just a contrary indicator. When everyone is bearish, you have to be greedy. All right. So you can see that we've calmed down in the VIX. Right now we're at normal levels that we've had for the past couple of years. Um, so there's no real fear right now. We're at 25. Um, so right now, if you look at our emotional graph, we were at a capitulation about a week and a half ago. And now we're probably returning to normal. We're still a little fearful, but and there's some people in denial. And pretty soon we're going to be on takeoff. There's going to be media attention, like there is, we have a great stock market, and then there's going to be greed. So we're very close to that. Um, we've been tracking the issues that may lead to a crash, and we've had a lot of these come up at one time. We've had the AI stock bubble bursting. We had Magnificent Seven stocks all go down at once. They were perceived as overvalued. Um, there are signs that the U.S. economy is slowing, and we had a weak dollar, and we had random Trump comments and his tariffs on April 2nd. So all this combined to have the perfect storm to have capitulation. So that was a good exercise. All right, so in this chart, we always remember that the S&P is now 22, so it's still overvalued. So if we correct by 20%, that'll take us to like a normal PE for the S&P 500. The worst first, we have the best performing sector right now is consumer staples utilities year to date. We have IT down 8% and consumer discretionary down 12. So financials are also up 3%. So it seems like our theme from the beginning of the year, utilities, healthcare, consumer staples, seems to be working pretty good. Um, but when there's momentum in the stock market, um, that usually helps the communication sector, IT, and consumer discretionaries. All right, so let's look at some of Dan Now's picks from beginning of the year. His ADTN is down 5%. Cisco is break even. the IJJ mid cap ETF is down 6%. In cash, his best pick this year um, is making 4% on a money market or treasury. Okay, that's really good. Now, let's review again the 10 worst single percent day declines for US stocks. The 1 day decline might be up 8 to 20%, but return after 1 year is usually pretty good. So return after 3 years is almost 100% positive. Return after 5 years is still positive. So the lesson learned here is even if the stock market goes down 20% and the stock market corrects to what's like a normal price to an S&P 500, if you wait a year, you're almost guaranteed to be positive. So let's look at some charts. We already looked at these charts. Okay, hold on. Okay, so let's review this rare Zweig breast thrust. This signal has been 100% accurate since World War II, with the S&P higher 6 to 12 months every single time, 19 for 19. So this is basically when there's an extended downturn in the stock market, followed by positive number of new highs versus new lows, and then there's advancers versus decliners. For a couple of days, that shows momentum. And as soon as that indication hits, there's a good sign that it'll continue to go up until the next year. That doesn't mean it doesn't correct maybe 5 or 10% in the meantime, but that momentum is usually powerful. So this is 1 week later after the Zweig breadth thrust, 2 weeks later, 3 weeks later, 1 month later. Okay, so you get it. And 1 year later, it's usually up over 20%. So there's a guy named Ryan Dietrich. I'd advise watching this YouTube video. He's a chief market strategist at the Carson Group. I like watching people that are positive. You know, they like to always look at the good things, good side of things whenever, things are bad. He mentioned in this video that this is the longest winning streak since 2004. We had 19 bear markets or partial bear markets like this year that we've corrected 19%. And 50% of that time, no, we have 19%. Every time we've had a 19% market in the past, there's been six times. And then we recovered 50% of that bear market. Of those times, only one time, 2022, have we rolled back and made new lows. So there's according to his research here, there's a good chance that we don't go back and hit new lows because we have momentum. And he mentioned economy is not as bad as we feared a month ago. So today we had a really good jobs report, meaning the economy, we have a lot of new hires. And he said market breadth is great right now. Breadth leads price is his motto. So lows of the year, he says, are probably in, and the bulls will have more fun. In past crisis, where we had 19% down, the rest of the world was in a crisis, and now only India and the United States are struggling with negative returns. He also mentioned that there's a saying, sell in May and go away. In the last 10 years, May was higher 9 of the 10 times. And the next 6 months have been higher 8 of the last 10 years. So actually, we should change that saying to buy in May and hold. All right. Let's look at top holdings of Magellan, Contrafund, BNY Mellon, and this MFS Massachusetts. I thought it'd be interesting to see what they're holding right now because this is a prime time to start looking for stocks for a long-term portfolio. These companies have held these stocks in their portfolio for like 10 or more years. And that's a good sign that if they're still holding them, then it's a good time to start buying some and holding them for long term. You can see NVIDIA, Microsoft, Amazon, Meta, Broadcom, Google, Eli Lilly, Visa, JP Morgan, MasterCard. These are um, Fidelity Magellan. It's one of the largest mutual funds in America. Fidelity Contra Fund has very similar holdings. Meta is their top holding. 17% of their money is in Meta. Is that amazing? So Meta is actually, let's look at the chart on Meta. There it is. Okay, so you can see that it's from its peak in February, it's down quite a bit. Um, Hold on. Okay, so Meta, where is it? Meta is down. It's basically break even from the beginning of the year. But they had a really good earnings report recently. So, okay. So, this could be a good time to start looking at Meta because you can see they had stellar earnings and they broke out from their earnings. They went up like 5%, but they're still lower than they were starting at the beginning of the year. And a lot of people keep track of that. So, all right. So anyways, I like to look at these top holdings and the ones that are held most in the funds are really catching my attention. Look at this. Microsoft, 12% of MFS Massachusetts Investment Growth Fund. Um, and then Apple, Nvidia, Visa. You have a lot of these, very similar holdings. Microsoft, again, is the top holding in this fund. They had stellar earnings and they went up 10% this month. So even Microsoft is down a little bit this year. Let's look at Microsoft. Mm, oh no, they're up 3%, 4%. Okay. So let's look at the our watch list year to date. Um, we have Tesla down 25%. Um, Nvidia down 17%, Apple down 15%. Um, Chipotle down 13%, Amazon. You can see a lot of Google, Pepsi, CSX, and Fiserv. Okay, so these are all down, and some other stocks are down marginally. The ones doing the best, gold is still up 21%. AT&T, high dividend paying stocks. Berkshire Hathaway is a steady company that's domestic oriented and has a lot of cash. They have 300 billion in cash that they can use um, in a recessionary environment whenever the stock market's going down. We have Abbott Labs and Waste Management, Philip Morris, T-Mobile US, Costco, and AbbVie. So if we look at these top performing stocks this year, that kind of matches what we were looking for when we were planning out our year. We were looking for healthcare, telecom, financials, energy, utilities, biotech will do better this year, return to the mean, because they all did bad last year. So we needed um, steady companies that consumer staples, steady demand for products, healthcare, people take drugs regardless because they need it, and companies that pay dividends. So if you look at all the stocks that are going up this year, they seem they seem to have a lot of these things in common. So let's go back to our list. I'm almost there. Okay. Okay. So we have AbbVie, a drug company. They pay a dividend. T-Mobile, they're a US based company. Philip Morris, they pay a dividend of 7 or 8%. Um, okay. That doesn't mean, and Visa is up 10%. So why would Visa and MasterCard be up? Probably because they have steady demand for their product in good times and bad. And on top of that, they are they're safe from any tariffs that might be happening in the world. Currently, we don't know if that's going to change. Right. Okay, that was a good exercise. This is another reminder. The crash that we just experienced, just look at how little these crashes are compared to the amount that you make if you hold your money through bull markets. So another thing to keep in mind is the money, if um, it's harder to make 15%. If you lose 15%, you have to make 30% in order to get back to where you lost it. So that's why it's a good idea to buy and hold. All right. So when there are crashes of 10 or 20% in a short amount of time, you have to think if you're down 20% already, that is basically the the low for a bear market activity. And if, in the worst case, it'll go down to 30%. But if that happens, then it's usually a bottom. And this is a policy, this past crash was a policy-based crash. It wasn't a financial crash. Policy-based crashes like COVID was a crash induced by governors that told all of their people to stay home and shut down businesses. That was self-inflicted economic crisis. And our tariff situation was also a policy-based, self-inflicted crisis. A lot of times, those crashes recover much faster than a global financial crisis, such as the Great Financial Crisis in 2008. All right, so all right, I think that's all I had to say for today. I hope you liked it, and I hope you have a good day in the stock market next week. All right, talk to you later.